Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, we're looking at Apple. Apple actually gave a signal at 114.53. Now that was not a buy signal, that was simply a signal to get out of the short position which we put on at this point here at 120.94. So it's about a $6 profit on that position. So we're out of the market now, neutral on the market. The market has moved over the positive 50 line, which is a good indication. However, we're fast approaching what is the resistance zone in our opinion. That's going to be the 61.2% Fibonacci retracement, which is right here. You can see how we're just getting to that level right now, about the 117.50 level. So let's see if it gets there. I don't necessarily think it will. It's going to find resistance in my opinion. And this is scheduled to be a down week in the market. So let's see how that plays out. Again, you're over the 50 line right here, which is positive, and I think that's going to lend itself to maybe a little bit more two-way trading, but nonetheless I would not be getting excited about Apple at the moment. Now the next stock we're looking at is Amazon. This is the juggernaut. We're going to look at a 3-month chart. You can see we had a signal here to be a buyer. This is all of our trade triangles are green. However, it was $529.95. It's $523 now, so it's about $6 lower than the original buy point. I would hold off on doing this, and I'll tell you the reason why. Because we're looking for a down week in the market, and I'll show you how we came to that conclusion. Now, I'm not saying be short, but if you want to be in Amazon, it's definitely in an uptrend. Longer term, you can see this is being in position now on the monthly trend from $341.26, so it's some $200 ago practically. So let's take a look why we think the market's going to go down this week. Now I'm looking at a daily chart. There's a couple things you want to look on the daily chart. That is, this is a formation which is really, we've talked about this before, and we're sort of going into this apex of this triangle, and these triangles tend to be breakouts to the downside. What I mean by that is that you have had a trend that is down, which is right here, and then the market sort of does this, and then boom, it goes down again. I think that's what's going to happen. I think it's going to happen potentially this week. And the reason I say that is because both our monthly and weekly are both negative, and that's the key thing. Don't pay any attention to the week daily on the big indexes. Minus 75, a little bit of a trading range, but nonetheless you're below the 50 line. You've been below that line since this time window right here, which is all the way back in July. So let's see how that plays out. But what I want to show you is how I came to the conclusion that we're going to have a down week this week. And that sounds crazy, but let's take a look. Take all the triangles off. Just very easily visually is how we're going to do it. So we're looking at the market. Here is an up, down, up, down, up, down, up, down, up, and this week should be down. So that's what we're looking for. So what it means is that you close, this is a low close right here. We close a little bit higher this week, close a little bit higher this week, close a little bit higher this week, and of course we closed a little bit higher last week. So again, this should be a down day, and it could be the Fed doesn't move interest rates. They do move interest rates. China continues to go lower because the trend in China is still very negative, and that's what broke this market in the beginning. One of the reasons why it broke. Let's move on. Same pattern in the S&P 500. This should be a down week. Let's see how that plays out. We're below the 50 line on the weeklies, and a little bit different on the Nasdaq. You have had a string of negative weeks, 3 in a row. You haven't had that on the S&P or on the Dow. But again, still below the 50 line. The trend is down. If you put our trend line on, you can see a monthly and weekly down. So I would say this is going to see these markets go a little bit lower. This is the euro against the dollar. You can see all of our trade triangles are positive. We're over the 50 line. It looks as though it wants to go higher. We may see a little bit more of a two-way action there, but nonetheless the trend is up according to our trade triangles, and that's the important thing to look at. Now crude oil, this is interesting. I think we are doing something that I think is a continuation pattern, possibly to the upside, and let me share with you what I think that is. So we've had the big move up. You can see right here, straight up from 38 all the way up to about 49. It's a big, huge move. We've had a pullback. This type of pattern here is almost like a continuation pattern. So you have the move up, you jog around. It's just the opposite of the pattern we're seeing in the indexes. So that's what we think is going to happen. But watch the daily very, very carefully, and of course the weekly, because if these change, if the daily turns to green, then you'll see an acceleration to the upside. Last market is gold. And Nobody wants to be in this market. The investors have no interest for some reason to trade gold, and you can see it's just evaporating. All of our trade triangles are red, minus 100, strong downtrend. This is where support's coming in at the 1,080 level, and there's no reason to jump in front of this market. I see no reason whatsoever to be a buyer of gold at the moment. Hey, I'm Adam Hewson. Thanks for watching. It's going to be a tumultuous week, of course, with the Fed announcing on Thursday what their intentions are. I think they'll do nothing because I think that's the type of Fed we have right now. And let's watch China, and let's watch the markets very carefully for that breakout to the downside that we think is going to happen this week. Have a great trading day, everyone, and thanks for watching.